When setting up an auto insurance policy, drivers are often confused by the differences between collision and comprehensive coverages. Many policyholders select these coverages without fully understanding what each option protects, which can lead to frustrating surprises when filing a claim. While both coverages pay for physical damage to your vehicle, they apply to completely different scenarios based on the cause of the damage. To simplify this choice, we can distill the distinction down to a single sentence that clarifies your options. Collision covers accidents where your vehicle is in motion and hits an object, whereas comprehensive covers damages caused by events outside your control while the vehicle is stationary. In this guide, we will unpack this one-sentence difference, explore how deductibles work for each coverage type, and provide clear rules for when you should carry both or drop one to manage your budget. This helps you optimize your policy. The first step in understanding collision coverage is defining its boundaries and looking at real-world examples. Collision coverage pays to repair or replace your vehicle if it is damaged in an accident involving another car or a physical object. The key characteristic of collision is that the vehicle is actively hitting something. This includes crashing into another vehicle on the road, hitting a tree, running into a guardrail, or hitting a telephone pole. It also applies if your vehicle rolls over or if you hit a deep pothole that damages your suspension. These are all active driving events. It is important to note that collision coverage applies regardless of who is at fault in the accident. If you cause a crash, collision coverage will pay to fix your own vehicle, while your liability coverage pays for the damage you cause to the other driver. If another driver hits you and they do not have insurance, collision coverage is the tool you use to repair your vehicle. However, because collision claims involve driver action and fault, they are more likely to influence your premium calculations in the future compared to non-collision claims. This makes driver safety even more critical. Understanding these scenarios ensures that you know when to use collision. If your vehicle is damaged while parked in a lot by an unidentified driver who fled the scene, that is typically handled under collision because a collision occurred. Knowing these details prevents confusion when filing a claim and helps you coordinate with your insurance adjuster. It also highlights why lenders require you to carry collision coverage if you have an active loan or lease on the vehicle, as they want to protect their asset. Having this coverage ensures they do not face losses. The second area of study is comprehensive coverage, which addresses damage caused by events that are outside your control and do not involve a collision with another vehicle or object. In the insurance industry, comprehensive is often referred to as other than collision coverage. It protects your vehicle from environmental hazards, natural disasters, and criminal acts. Specific examples of comprehensive claims include damage from hail, windstorms, falling tree branches, floods, earthquakes, and fires. It also covers theft of the entire vehicle or vandalism, such as keyed paint or broken windows. These events occur when your vehicle is parked or stationary. Additionally, comprehensive coverage is the specific protection that applies if you hit an animal, such as a deer. While hitting an animal involves a collision, the insurance industry classifies animal strikes under comprehensive because they are unpredictable wildlife events. Comprehensive also covers glass damage, such as a chipped or damaged windshield caused by a rock kicked up by another vehicle. Many providers offer glass coverage with a lower or waived deductible because repairing a windshield is much cheaper than replacing the entire glass pane. This distinction is critical for your financial calculations. Knowing what comprehensive covers helps you distinguish it from collision. If your car is damaged by a flood while parked in your driveway, you cannot file a collision claim. You must have comprehensive coverage to receive a payout. Because comprehensive claims are generally considered unavoidable, they rarely result in premium increases compared to collision claims. This makes carrying comprehensive highly valuable, especially if you live in an area prone to severe weather or high theft rates. Understanding this separation allows you to manage your risk profiles efficiently. Finally, we must examine how deductibles work for these coverages and when it makes financial sense to carry one or both. Both collision and comprehensive coverages are sold with a deductible, which is the amount you must pay out of pocket before the insurance company pays the remainder of the claim. You can select different deductibles for each coverage type. For example, you might choose a $500 deductible for collision and a $250 deductible for comprehensive, reflecting the different risks and costs associated with each. When deciding whether to keep these coverages, a helpful rule of thumb is the 10% rule. If the annual cost of carrying collision and comprehensive coverage exceeds 10% of the actual cash value of your vehicle plus your deductible, it may be time to drop them. For instance, if your older vehicle is worth $3,000 and your deductible is $1,000, the maximum payout you could receive is $2,000. If you are paying several $100s a year for this protection, you might be overpaying. In summary, collision and comprehensive coverages work together to protect your vehicle from different types of physical damage. Collision handles driving accidents and impacts, while comprehensive protects against weather, theft, and wildlife. By adjusting your deductibles and monitoring your vehicle's value, you can ensure that you are not paying more for insurance than the vehicle is actually worth. Taking the time to evaluate these coverages will help you maintain a balanced policy that protects your assets without draining your budget. Regular adjustments to these options will keep your insurance aligned with your vehicle's depreciation. To ensure you have a complete understanding, it is also helpful to look at how these concepts apply in everyday scenarios. Many professionals recommend documenting every step of the process, keeping organized records, and checking for updates to regional regulations at least once a year. By staying proactive and monitoring these changes, you can adapt your approach, avoid common pitfalls, and make more informed decisions that align with your long-term objectives and protect your household budget from unexpected expenses. Policy Plain English translates insurance jargon into everyday English. The channel explains auto, home, renters, life, and health insurance, covering how to read policies, how deductibles work, what coverage limits mean, and common mistakes that cost buyers money or lead to claim denials. We do not sell policies or offer personalized advice. This video is general insurance education, not legal advice, tax advice, or a recommendation of specific insurance policies or companies. Coverage details, rules, and exclusions vary widely by policy, state, and provider. Consult a licensed insurance agent or qualified advisor for your specific situation.